Infosys management is talking after Q1 earnings. Let's go across and listen what Mr. Parekh is saying.
And a continued success in clients selecting us for consolidations. We are seeing good demand for AI agents. We have built 300 agents across business, operations, and IT areas, and they're now deployed within our clients. Our horizontal and vertical agents are helping our clients drive faster decisions, improve customer experience, and improve operational efficiency. Based on our performance in Q1 and our current outlook, our guidance for growth for financial year 2026 is revised from where it was 0% to 3%. Now it'll be 1% to 3% in constant currency terms. Our margin guidance remains unchanged at 20% to 22%. With that, Rishi, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Shangarajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV18.
Hi, gentlemen. Thanks. Been very strong. The performance has been good. The first quarter revenue is above what the street had factored in. Two questions on this. If the numbers are so good, why have you not raised the upper end of your guidance? Why just the marginal revision from 0.3 to 1 to 3%? How much of this, upward revision that we're seeing, and including the kind of constant currency growth, 2.6% in this quarter, has come from your inorganic, from your acquisitions that you've made? That's one part of the question. Also, how would you guide the street to look at these numbers? Would you really say this is a turnaround that you're seeing, in the current macro environment, that going ahead this kind of performance would be sustained? And a word, last time we didn't hear much from you on the whole tariff conundrum and how that is impacting discretionary spend, specifically in sectors like manufacturing, retail. What's your sense on, the clients? And, if you could also add a word on your hiring plans for the year. Thanks very much.
Thanks. So first, on the guidance, what we have seen this quarter is a strong performance in terms of where we have delivered the 2.6%, as you pointed out. With that, and with the current outlook, where we have seen a lot of the discussions on the economy worldwide having come to more stable situations, but still seeing that it's not fully settled. Given that, we've increased the lower end of our guidance as we go closer into the, progress into the year, closer towards the end of the year. We typically narrow our guidance, and that's first part of what we've done, which is increase the lower end. We still see things within our guidance where we look at some things which will give us good traction. For example, what we've seen in the consolidations. We've seen very strong work that we've done on AI with agents, and we see that. And we also see the economy globally, both in Europe, US, going through changes. So keeping that in mind, we've narrowed the guidance and increased the lower end. On the inorganic part, I'll let Jayesh mention how much of it is inorganic.
Yeah, so inorganic in this quarter has been around 40 basis points within our 2.6% that we reported. And for the full year also, it will be similar number.
And then back on the sort of economy, we talked about it last quarter and also in addressing it today. There are overall changes in the economic environment, and we mentioned last quarter, we share that again. We see some of that impact, for example, in logistics. We see some in consumer products and some in manufacturing. But equally, we have seen benefits, especially because we've seen good traction with the work we're doing with agents in AI, and a benefit from consolidation that we've looked at, that the clients have looked at us and been positive. And that has given us some of the positive growth that we've seen in this quarter. So there, on the acquisition, as Jay shared, it's a small part of it. Even if you keep that aside, we are well over 2%, 2.2 in terms of constant currency growth in the quarter. The way I would look at it is it's very differentiated performance because we have what we believe to be one of the best ways that we are deploying AI, enterprise AI, into our clients. So these are active projects where we are using agents, different types of agents that clients are leveraging, whether it's in their supply chains, in their customer experience, where they're getting productivity benefits, where they're getting improved customer service. That's one aspect of it. And the other aspect is we are seeing clients are selecting us more and more when they're looking at consolidation, because inherently we see clients see Infosys' delivery as very strong and stable, and also providing new ideas, especially on AI, for improvements into their business. So that's the differentiated performance that we're seeing in the way that we see it.
So if you look at our hiring numbers, our overall headcount has remained constant at this point in time. Our utilization is at its peak at 85%. So we will continue hiring, and we expect to continue hiring in line with what we've announced at the beginning of the year. There's no change there.
Thank you, Ritu. The next question is from Haripriya Suresh from Reuters News.
Good evening, gentlemen. One quick, I wanted to understand, America has not, growth has been sort of flattish, but Europe has grown really well. Just some color on the specific markets. Is Europe client-specific? What is happening on that end? And, in terms of the employee headcount, like you mentioned, I know it's been flat, but I know there's a lot of talk about how Infosys is using AI. Do you see, if utilization's at its peak, do you see productivity increasing where you don't need to hire as much going forward? And will this sort of be the level that we will see it at? And I wanted to get some color on what the wage hike scenario will be for this quarter as well. Thank you.
So coming to your second question on headcount, as I said earlier, headcount has remained flat. Despite that, we've been able to deliver 2.5%, 2.6% on growth. Large part of that came from the RPP increase or the pricing increase that we got and the seasonality benefit that we got. 40 bips came from the acquisition, and the balance came from the volume increases, which we've been able to manage within our current headcount through utilization. Now that we are at a peak, any further volume increase will need to be, we do need to come from the hiring, right? So that's where we are. In terms of US and Europe, I think Europe has been strong footing for us for many quarters in the past. That's on the back of the investment that we made a few years back in Europe. We had identified Europe as a geography to invest into, and all of that I think is working well across sectors. And sorry. Because Europe is growing faster versus America, to that extent it's changing, but still US remains, the largest sector for us, largest geography for us. Sorry, you had a third question.
Wage hikes.
Yeah, so we did a wage hike already. First wage hike, first part was that effective January. The second phase is already rolled out effective April. First, the impact of that is already baked in the margin of this quarter. We had 100 basis points of impact on account of wage hike, as well as the higher variable pay that we paid to our employees this quarter, so that's already done. Having done the wage hike very recently, next one we'll have to decide when.
Thank you, Haripriya. The next question is from Beena Parmar from the Economic Times.
Hi, Salil. You mentioned about, the revenue being stronger. Some of your peers have pointed out that there has been some revenue cannibalization that they are seeing. Are you also witnessing it, and are you seeing some productivity gains, benefits that you're passing on to your customers? And is that also leading to change in pricing? I think we spoke about it briefly, but has there been any change in the first quarter? And secondly, is that also impacting your margins? What were the factors that led to the margins? Because I think it has declined. So could you
let me start on the revenue one. I think we are seeing with AI a lot of productivity benefits. We also saw productivity benefits that we were already working on from automation and lean, which were coming through. Typically, all productivity benefits, a part of that is shared with clients and a part of that is shared with us. We see if you look at the overall level, what Jayesh was sharing, we have seen our productivity of our revenue, the way our own pricing is working at a macro level, improving. And this is more because we are doing work which is creating more impact, in addition to the productivity which is making some of that benefit being shared with clients. So these are two different factors, but on balance, we see an improvement. And that's what we are seeing into the quality of the revenue that we are seeing now.
Gains you're passing on?
So there, we are not discussing the amounts we are passing on, but in terms of what we are seeing as a benefit, we are seeing between 5% and 15% through AI programs where we are working with clients where typically there are disparate systems. Internally, there are some things we've done which are slightly higher than that, but those are on internal, like if you look at our Finacle product, it's one uniform sort of a code base in which we can get better productivity.
Thank you.
Yeah, and on the margin walk, if you look at the 20 basis points of decline, the puts and takes of that, 100 basis points of headwind came from compensation-related factors, including the comp hike that we gave in April, as well as the higher variable pay that we pay to our employees, or will pay to our employees for this quarter. 30 basis points was a headwind on account of currency, and 20 basis points for other factors. This was offset by 70 basis points of pricing benefit that we got, both seasonally as well as the benefit that Salil was talking about from productivity and everything that we've been doing under Project Maximus. 40 basis points came because of the acquisition-related impairment that we did in the last quarter. That was a one-off in the last quarter, so that was a benefit this quarter. And 20 basis points because our third-party cost was lower. So just to highlight, our 2.6% of growth was despite the fact that our third-party revenue and costs were lower by 60 basis points.
Just one macro question. What are your conversations with the clients? Has it improved in terms of the business demand? And, are you seeing that the tariff-related uncertainty or the caution is now over and they are starting to kind of, make decisions?
So on a macro basis, what we see is there are clients, all clients are quite focused on enterprise AI, where we can share with them what is working, where it's working, especially with agents. Then there are industries, specifically logistics, consumer product goods, manufacturing, where we see the impact of the changes in the economic situations. Where we were at this time last quarter, there's also been several things which have been done, which gives more view and focus into what's going on. And yet there is still some open items which are going on. So we see, for example, from clients, there is quite a lot of attention on cost and efficiency of their own operations, even if they're not impacted by the changes in the economy. So that is all going on, including some of the benefits that we're seeing from AI. And then finally, on a macro level, we, at this quarter, in our large deals, we've seen a lot of deals where we've benefited from clients making consolidation decisions.
Thanks, B.